Hello everyone, welcome back to Perception Paradox. My name is Jivile and I'm your host, and today we are continuing with post-TechBBQ series, the conference which happened in Copenhagen end of August. And today's guest is Raimonds Kulbergs, who is behind the Bad Ideas Fund, one of the most unconventional venture funds in Europe. So we talked about why the world needs a new kind of VC and what makes founder to founder backing so powerful, and how AI is completely reshaping the way startups are built. So that's a very brief, direct, straight to the point episode with Raimonds. So if you're curious about the future of venture capital and also to learn more about the Bad Ideas Fund and get some Raimonds insights, this episode you don't want to miss. Real people, real stories, and real challenges that break the status quo. I'm your host, Jivile, and welcome to Perception Paradox. Ladies and gentlemen, welcome back to Perception Paradox. And today I have Bralukas Latukas. Bralukas Raimonds from Bad Ideas Fund is joining me today here at TechBBQ, where we are having the second day of conference. Lots of networking, lots of conversations, a bit of energy like, oh, let's pump it up. But we're on there, and Raimonds, finally we're making that.
Yeah, a long time in the making. Finally.
Finally. How is it
We
going
made it
for you?
happen.
Copenhagen, it's your first time here in the conference, right?
Yeah, it's a fascinating inside look on the Scandinavian ecosystem. I've been spending these couple of days asking people, couple of dozen people, Stockholm or Copenhagen, which is better city? And so far, despite the fact that Stockholm has much bigger depth of startups and just ecosystem, seems like it's leaning toward Copenhagen.
Because you're also looking for maybe exploring,
Yeah,
right, the ecosystems.
We are, yeah, just to give you context, like Bad Ideas is what, 250 folks who have walked the walk, operators, founders, who every month back a new startup. So we're like folks who have been building scale-ups like Scale AI, HubSpot, Shopify, Dropbox, Wise, Bolt, Vinted, and the likes. We're growing well. And we have quite a few also Scandinavian friends on board in the community. And I'm thinking if, like, I was just actually speaking to one of our portfolio companies, which we are right now investing, which happens to be a Danish founders. And they said, yeah, there is a big gap in Denmark, but also whole Scandinavia, especially for a different kind of VC that is for pre-seed seed that is community driven, which I see actually. Which is what Bad Ideas was born out of, like a need for grassroots, community-led founders backing founders ethos, which is so widespread in US and so many of those, but Europe, I still don't see many.
And how
Have
do
you seen?
Not
Local
but,
pockets probably as well.
I don't think that we have such a give back community yet, or that approach and mindset as in the US. But I feel like the conversations are starting, but you're definitely one of the frontiers, in my opinion. But in the Nordics, I would say, I don't know, the buy founders are doing a good walk to walk, right? So they are with the founders pledge and everything, but not that many, to be honest, yeah. But cool, awesome. So you're now here. You've been up and running the fund for quite some time right now, and it all started from an idea, having a great idea or a bad idea. And I recall you back when a few years ago we had a call and you were pitching this Bad Ideas Fund and so on. Like, so what do you think? Like, I mean, like we have so many bad ideas, and you know what? For someone, this bad idea next year will be a good idea, or something like that. So can you tell us a bit the thought process? What have you started missing in the ecosystem that you came up with this founder-to-founder approach?
Yeah, when you've built a couple of startups, you acquire a thick skin of getting those rejections, hitting your head against the wall. How do you go through like building your startup, but also fundraising? And fundraising should be, you want to have a partner that is there for you for the long term and on your side. So you want to have someone who understands you, and who better understands you than who's gone through the shit that you've probably gone through or more. That is nothing strange or uncommon in US, in West Coast. I've gone through the 500 startups journey in Silicon Valley, had an early exit in the US, And there you could see up front, there are quite a few of these founder collectives who live by the same ethos, like founders backing founders. But there's lack of that, I think, in Europe. So that was the thesis behind it. If we can be the kind of investors we wanted when we were raising, and that speaks also to the name that I was pitching you, not treat ourselves too seriously. We might not know what we are doing as well. We all are here to figure it out. But also it plays on the Paul Graham's essay that those ideas that seemed outlandish or ridiculous early on turned out to become decacorns like Airbnb and Uber.
And what do you do different as a fund now?
That's what keeps me going. It's so much fun to be building. This is the best job. Like you can apply, you can essentially speak to the most talented folks, whether that's on the community side or the founders you're backing. And at the same time, you can be tinkering, rethinking how a VC should actually be operating nowadays and in the future. You can start with a blank sheet of paper and reinvent VC. So that's what we're doing right now. And we're approaching it from a first principles approach where, okay, so what will the future VC not be, maybe? So what we see it shouldn't be is if we can automate everything away in how a VC is run, starting with all the boring stuff and maybe even the judgmental, like who are the best founders. Maybe we get there, building bad ideas as a zero employee VC. So that will be one aspirational part. But then what remains is how, even if it's so automated, what you will need anyways is those connections to the real world. So what the VC of the future will not be, I'm sure, a VC that doesn't have a community behind it. It just should become irrelevant, right? If you will put a VC that has a community and doesn't, a VC with a community should outperform it because it has so many connections to the real world that they can leverage, but also real world experience that you can put a face to the recommendation. Hey, here's how you build up a really awesome GTM strategy. And here's a person who has actually done it, seen all the failures. So matching those together, off you go, you can faster get to Series A with higher probability. That's the kind of bet we are making.
Okay, fun bet for sure.
Amazing.
And okay, so we just spoke with you a bit briefly, right? That the landscape is changing, right? The way we build is changing. Also, the investment landscape is shifting from the structures to the money deployment and so on, valuations. So, what's your approach? Maybe more visionary. How we're gonna build future products and future unicorns, and how we're gonna back them?
Well, you can see it play out in the real world, like Lovable, which is the darling of Scandinavia. What is it? February. What is it like? I think something like 16 months since launch.
It's a year and a half, literally, like something like that.
Or 18 months since launch and 130 million ARR, annual recurring revenue. Whoa! And with 60 employees, 60, not 500, but 60 employees. So that's something that we'll see more and more so, and I'm sure Lovable is dogfooding their own product, applying it to their own ways of working inside, and yeah, that's what we'll see. The less and less people needed to actually create a unicorn. But I'm thinking like that's where bad ideas. What we want to be doing is working as a collective to build out all of these tools and means to get there faster. It doesn't have to be just on the founders' shoulders to come up with, hey, we'll use these kind of automations, we'll use these AI agents or employees to get there faster. We want to be an active part of renting out or borrowing, gifting these AI employees. And so that's the vision we have.
Okay, cool. That's pretty...
And yeah, it's like, can you imagine, like, if you iterated it long enough?
Yeah.
How and the pace is increasing. The next 24 months should be either a shit show or a super exciting period where the pace is increasing. At ease that you can create a startup is lowering. It becomes easier and easier. The question is whether we'll mentally be able to keep up with the pace. But it should be interesting.
I'm pretty sure that it will be. And my question now goes again a bit into your investor hat. Where do you find the founders you back? Or how do you find them, right? What's your process? Of course, I can assume that it can be a lot of serendipity, network effect, some kind of shared connections, but still, do you think that we can still find founders during the events, or it's a mix and match?
Well, speaking to all founders, I think I can speak from my experience, never do fundraising through an event. You wouldn't want to go to an event expecting that you'll do a round. You just don't control your funnel. You don't know who you'll meet in the next side event, and you spend your next 30 minutes talking to someone who is never really a fit. Now you've wasted those 30 minutes. As opposed to running it as a structured process where I like how my mentors at 500 Startups was preaching, Marvin Liao. You do 4 weeks of fundraising, 4 and 5 meetings minimum per day, and do it for 4 weeks. First week is pitch to shitty angels. Second week is pitch to good angels. Third week is pitch to shitty VCs. Fourth week is pitch to good VCs. And at the end of that, you should be getting to a reasonable 1 million phase.
I can imagine now if someone who hasn't heard this structure listening to us who is investing will be asking the founder, so how many weeks you've been pitching?
Where am I?
Where am I? In which category?
Exactly. Yeah. So that's a more reliable way. But like coming to your question, where we're getting deal flow is it's wherever in those 4 weeks when the founders reach out inbound. Other VCs also are referring because we see that we can be helpful in the cap table. But what we see more and more so is the community where our operators, founders, they join. They are often the first ones before even the VCs to talk to the teams that are building something new. And what other thing we are seeing, this is going to be the third case in the last year or two, where founders who join, really accomplished founders who join the community, they invest a little bit, a few deals, a few years, and then they start their own thing. And we already have a good connection. We know what they've done and their ability. We could be backing them with our eyes closed. So we've had already 3 deals like that. One of the craziest stories has been Scale AI. The most expensive acqui-hire in the world. Head of growth there, Ruslan Nazarenko, he quit his job from Scale AI. Why? Because he felt like he was frustrated it was growing too slow. Imagine the fastest growing scale up in San Francisco growing too slow. And he had figured out a way how he can grow what Scale AI does faster and do it just in healthcare, which is a sector he is super passionate about since forever. So yeah, it was a no-brainer for us. Like we invested in essentially him, because he didn't have a revenue, he didn't have a product, he didn't have a website, didn't have a team, didn't have a deck. So we invested based on 2 pages of a Word document, and we were super happy because he's like gotten a crazy great pipeline of deals. Now raising the next round already within a year with a huge multiple valuation increase, and gotten a team from Stanford, from Meta, from Anthropic assembled. Super rock star. So we've had those, like a few of those in the making, and I feel that that's to my point. The future of VC, I think, is you want to build a community of folks who have walked the walk, and then it's good internal forever cycle that you see there going on. Founders backing those same community founders, and they change their roles as they switch their life chapters.
Raimonds, yourself being an ex-operator, right? And still, I would say building a fund is like an operation role, right? You kind of, as also a founder. So what would you build right now when it comes to the current trends and problems you're seeing in the world? So if you would be having now the blank page, okay, it's time to build something. Which direction would you go? Because you're such a curious person. Like what I've experienced, that's interesting, and this topic, and medtech, and fintech, everything. So which direction would you go? Where do you see that we need more?
Yeah, that's fascinating. We were actually having. Did you attend yesterday's Lovable?
Somewhere else, unfortunately.
A good question came up. How do you kill Lovable?
Huh.
And it was asked to Anton, founder of Lovable and also founder of Synthesia. How do you kill those 2 companies? Ask them. So how those founders responded was, you kill them in 2 ways. One is focus doing the same thing in a much smaller segment in a much better way than they could ever, because it doesn't make sense for a bigger company just to put so much resource on something so that narrow. That's one. And the second approach is, okay, think of what market is not today, but in a year or 2, what what can you predict will be there that today there's just non-existent, but nobody would be building there. But how will the market evolve and build for that? Just predict the future. So having those two principles probably pays to come up with an idea. But to make it very specific, we had actually that conversation, right? You want to have something that is a tailwind, right? You don't want to be like having a headwind when it comes to building your own. You want to make it as easy as possible. So what's the biggest tailwind right now? You have every startup that is going to be born and going to be fairly successful is going to have an AI model or proprietary data that they'll need to train, make sure that it is running well, that is producing, outputting consistent and high quality, right, outputs. So you need every probably industry vertical needs a startup, a scale-up that is doing just that, ensuring quality of the AI models of all the startups. So it's benchmarking evals, just what Scale AI is doing, but do it by vertical. So that's a huge opportunity, and that's the business model is no longer there paying for seats or paying subscription fee for a couple of €100, but you pay for per output. And as the data volume increases, it's just an exponential increase in your revenue as well. So that's, I think, the biggest opportunity. And there is some good amount of science and math behind it, but it's, at the end of the day, not that complicated. You measure what the model, whatever model should be doing, you ask it to do it, see what is the output, and then ask your expert humans, if you ask this question, what should have been the answer, and then compare the two. In the most trivial sense, that's what the business model is. I think that is an exciting opportunity that's not tapped.
Thanks so much for sharing. I love this whole pep talk. Right, but unfortunately, we're going closer to the end, and I have this tradition at the podcast that I ask every guest, like, since we now had the conversation, listen to the episode, what would be your final thought to ponder for everyone who is here with us today listening?
What would be what?
Final thought to ponder for everyone who is here with us listening. Some kind of question to answer, I don't know. Something that you're trying to find an answer for yourself. It can be philosophical, life-related, business-related, anything.
Yeah, this is something that we've been a struggle for me in my first startups. Would wish everyone to, as the pace of innovation is increasing, it's getting more and more exciting, but we're also putting more and more pressures on ourselves. FOMO, did I miss the news, and did I miss the train? And just like, let's imagine this is a simulation and be ambitious, but just enjoy the process without controlling the outcome.
Awesome. I think that was very straight to the point, sharp. Thank you, Raimonds. I
Good
think
job.
after 3 days of the conference, no, it was really valuable. I think great to have an overview of the fund, of your thought flow and what you thought train, and to see what's ahead of us. Yeah, ladies and gentlemen, it was Raimonds from Bad Ideas Fund, Broliukas Latukas, and thank you for tuning in today, and see you next week.